Hello traders, Gary Wagner here. It is Friday, the 20th day of April 2012, about 11:10 in Honolulu, 5:10 in New York, and this is the Daily Report, our weekend review. Quiet week as a whole, but we do have some interesting topics that I am going to be discussing today. As far as the closing prices, we're going into the close right now for the weekend. Very, very quiet, as I said. Up about 30 cents currently in gold, 1642. High is 1647.80 and the low is 37.80, a $10 range. We have silver trading down about 10 cents on the day. As you can see, 31.66. Kitco is showing it at 31.70, 31.80. Bid-ask spread, 31.51 as the low and 32.02 as the high. Very quiet day in the market. You know, traders, I don't know if I want to call this the quiet before the storm, but what I will say is there are a couple of important meetings that will take place beginning this weekend and also on Wednesday of next week that to a great extent could in fact influence the price of gold as well as the direction of the dollar. What am I speaking about? Well, on Wednesday of next week, of course, we have the Federal Open Market Committee meeting, and with the Federal Reserve Chairman Ben Bernanke, and he's going to be speaking after the results are actually released. Now, this weekend, we have the International Monetary Fund. They're going to be meeting today and through the weekend to talk about the sovereign debt problems in Europe. And really, the IMF right now is boosting their capital. Right now, from what I've read on Kitco, $40 billion worth of boost. It seeks to help Europe, and sources said more clarity could come upon the expansion in IMF funding, given markets a stronger sense on what's available to support the global economy. Up on the screen, we are looking at a 770-minute. It is a Henkin candlestick format chart. And really what we're doing, I will put up the original scan that I took from R.N. Elliott's book so that we can kind of superimpose it on what we're looking at here. So what you can see is it really does appear as though it is almost a textbook case, especially when you look at, this is figure 31 out of his book that I've just put up, but especially when you look at this beginning, what we thought was an ABC, which turned out to be the beginning of a triangle correction, and therefore wave one. You can see how he fixes it. The other thing that he talks about is that in a medium-sized correction, and I don't know how we would define or quantify that, but in a medium-sized type, he says, the fourth and fifth legs may be composed of one wave each. Now, why is that important? It's important because we are truly getting close to the apex of this triangle, as we have seen a series of lower highs and higher lows. In other words, the price range itself is compressing, and the range between the upper resistance and lower support is getting closer and closer together. The fact that we would see a single rally up or a single correction down becomes more likely and more evident within the marketplace itself. Now, this tightening of range can be looked at in a couple of ways. I've put up a weekly spot gold chart, Henkin Ashi format, but what is of interest here is when we look at the recent lows that we've had, what we're labeling waves 1 and waves 3, we take a look at this market long term. This is beginning at the end of 2008. This is our long support line. And we have two basic resistance areas in terms of our channel lines. As you can see, the primary channel, because the market has maintained a trading range within this channel for almost all periods of time except our contract highs and our secondary top that we came in. But when you consider that, you can see it trades to the upper end of the range here, right to the lower end of the range here. Right now, the market is still following in a bullish pattern in a serious bearish correction. When we stand back and look at this market, we have to acknowledge the following fact, and that is, as long as this market maintains above this long-term support line, and these are our channel lines right in here, the direction of this market is still higher. Now, there can be no doubt when we take a look at the fact that it hit 1900 for a brief moment and is now trading back roughly in the 1650 area, $250 below that. When you look at the big picture, you can see that significantly it looks a little bit different. Lastly, in terms of looking at gold today, we are looking at another weekly chart. This is the Comex June Gold. It is in, of course, Henkin Ashi format. And one thing I can say when I look at this particular chart is, what kind of trend are we currently experiencing? Well, there can be no doubt. We have been in a downtrend. However, when you look at pivot points, reversal areas within the marketplace itself, such as these two areas here, for upward reversals or bearish reversals here, bullish reversals here, what you will see is before that market can turn around, you have to, or you generally, I should say, see a slowing of trend, and that can be defined in a Henkin candle as the following parameters. The first parameter is, in a strong trend, you get a strong bearish trend, you get these absence of these upper wicks. You get long body size. That's indicating that you have a good size strength or momentum behind that move down. And as that market gets to the pivot point, you will start to see the tails reemerge, the upper tails, and more importantly, you see the body sizes really shrink to what I call a doji-like candle. When we take a look at this chart in terms of the Henkin candles themselves, there's two things that stand out. The first thing is we are definitely seeing the types of candles we would generally look for as the market pivots or reverses. And the second thing is that these lows here have maintained above this longer term support line drawn from the triangle correction. Lastly, I want to spend a few moments and take a look at the silver market. We are looking at a 420-minute Henkin chart. It's the cash chart or spot month of silver. And silver has really not been able to do a whole lot. It's in this very narrowly defined range. We had this one spike up. That was towards the beginning of this month. The one thing that we can see, though, is if we take a look at different areas in terms of straight support levels and resistance levels, we're probably, if we see this market move back up, and I believe it will follow in tandem with gold, and I think we'll get a better indication of gold's direction, whether or not it's going to hold that support line or even possibly break through with the meetings that are going on with the IMF this weekend, as well as the FOMC meeting on Wednesday. We're going to have, there can be no doubt, some real resistance in the area of around $33 per ounce. In terms of support, when we, and I'm trying to get this as straight as possible, when we look at these series of bottoms here, which are certainly showing us some real support right above 31, carry them over, what you will see is that they do match up to the lows that we have within these candles themselves, these Henkin candles themselves. I would think that we're going to continue to see support above $31, but I also believe that we might see resistance just at $33 per ounce. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.